heinous day for the averages, including the industrials. Off a weak manufacturing PMI number, there were still companies that managed to buck the trend. Take Cummins, one of my faves, the maker of truck engines and power solutions, which soared to a new all-time high today, only like a blowout quarter. The stock finished the day up nearly 5%, but on any of the day, I think it would be up like 10%. See, Cummins posted an enormous revenue beat, with the company earning $5.26 per share. Wall Street was only looking for $4.83. On top of that, management raised their full-year revenue and EBITDA margin forecast. It was a classic beat and raise, people, hence the rally. How'd they pull this one off? How can Cummins defy a squirrely economic environment and a soft market for freight and Class 8 trucks? Let's go straight to the source with Jennifer Rumsey. She's the chair and CEO of Cummins. Hear more about the quarter, what comes next. Ms. Rumsey, welcome back to Man Money.
Thanks, Jim. Great to be back with you.
Okay, I've got to tell you, it was a shock. The numbers were so much better than the companies that you sell to. How is that possible? How do you do that?
Well, as you noted, we had a really strong beat in our second quarter earnings call earlier today. Record revenue for the company in the second quarter. You know, really, there's a few factors driving it. Our products are performing really well out in the field. We've been able to take capacity up in some of the places that we've had some supply constraints and meet the demand, and the heavy-duty market has held up for us. On the back of that second quarter, we had record revenue and build rates out of our Jamestown engine plant. But other markets are really strong for us as well. Medium duty on-highway truck, the pickup truck business. And, you know, one of the standout performers for us was our power systems business, where we're seeing really strong demand in power generation on the back of data center customer demand and other critical infrastructure, backup power.
Well, I think you guys are doing a remarkable job. And what you're doing, I also like, is you're taking some of these profits and you're putting them in a lot of new technologies. I think people have often said to me, why are we lagging in battery technology? I think you're going to close the gap with what you're doing, correct?
Yeah, I mean, really, it's a very exciting time for Cummins. While our business is changing, our industry is changing, our Destination Zero strategy, that's really our overarching strategy, having us invest in advancing engine-based solutions and decarbonize those, both higher efficiency diesel and alternate fuels. But we're also investing, as you noted, in some of these zero-emission solutions as the markets start to adopt and as we see customer demand growing. And there's exciting things happening on both sides of those. We're investing at record levels of R&D across our business, and we're also investing in manufacturing $1 billion into our U.S. manufacturing plants for our new Helm engine platforms, and then also investments in battery cell with a new partnership, Amplify Cell Technology, that we form with PACCAR and Daimler Truck and Bus. And then in our own original plant here in Columbus, Indiana, where we're investing not only in the blocks and heads for those new engine platforms, but also in electrified components, including battery packs. So, you know, it's an exciting time and a lot going on, and really our strategy is playing out for us.
I think you got to explain Helm to people, Helm and natural gas. This is so exciting. It's so great to hear what you're talking about, because obviously you're doing better than a lot of your customers do, but you're also at the cutting edge of pretty much you're agnostic about fuel.
Right. The great thing about our strategy is we have a range of solutions, right? We're watching how the market is moving in some of these new technologies and investing at the right time for different applications. There's not one solution that's going to work for all of our customers. And these zero emission solutions still today, the infrastructure to support them, the cost of operating for those for our customers is a challenge. So these Helm engine-based solutions, Helm stands for high efficiency, low emissions, multi-fuel. Those are a really important part of growing our core business, continuing to have best-in-class engine-based solutions. And then for some of our customers, they want to start moving to these alternate fuels. So this month, we're launching with PACCAR the natural gas, new 15-liter platform. And we have customers that are really interested in renewable natural gas as a way to meet their sustainability targets.
And that, just so people know, RNG actually is that would help for Scope 3 for decarbonizing for many of the big companies that, like an Amazon, that needs that kind of thing, correct?
Yeah, Amazon, Walmart, you know, there's a lot of big companies that have these sustainability goals, and they're running businesses. So what's the most economic solution to meet their needs? What can provide the operating capability that their business needs? And so that's what we're really focused on for our customers.
All right, let's talk about data centers for a second. I know from some of the work that I do with an outfit called RBN, they put out really terrific stuff today, which is that there are certain areas of the country just don't have enough power anymore. and if the data centers want to be there, particularly actually in the Northeast, Virginia, they just don't have the power. What can you do to ease the power problem for these data centers that desperately need to open up, but the gating factor is power?
Yeah, exactly. So we're seeing a lot of growth in data center as we all have a need for more data, data storage, AI, Gen AI. This is a trend that I think is going to continue to happen. And having power and having reliable power is critically important for these data center applications. So primarily what Cummins is doing today is providing backup power in the form of our generator sets so that they can ensure that they have the power that they need when they need it. And if the grid has any instability or there's power outages, that occur, they ensure they have high uptime for their customers.
Okay, so tell me about hydrogen, which is my favorite fuel, but we haven't had any success. Suddenly you're willing to be in it, which I know is going to be very costly, but so a lot of people say it's the ultimate fuel.
Yeah, we need hydrogen. Hydrogen has to be a part of the answer. And the reason is you've got renewable energy that we need to convert into some kind of fuel, transport, and have it available when we need it. So hydrogen can provide that way to store renewable energy, transport it to where you need to have that fuel. Secondly, in certain applications like a heavy-duty truck that's very weight sensitive, is traveling across the country and has high power, long range, batteries are too expensive, too heavy. They just don't work for that application. So we need hydrogen-based solutions, and we're investing today in hydrogen engines. So we'll be able to burn hydrogen, these Helm engine platforms, and then also in fuel cells. I think this is going to be a little bit farther out. The reality is, hydrogen is going to take some time to develop, but we're advancing those technologies. And then, of course, we're also in electrolyzers for hydrogen production. And that's a business that we see developing sooner, although it has slowed somewhat from what we'd originally projected. And if you go back to our Analyst Day in May, we took up the guidance for the company overall in terms of revenue and cash flow, but we did lower expectations in 2030 for that Accelera business and raise them in our core business just based on how this transition is playing out.
All right, well, one last question I have. I was listening to almost every single trucking company call, and with the exception of one that actually just reported, almost all of them have been talking about a freight recession. I'm trying to figure out how to jive what you've done, which I used to think of you as a truck engine company, with what they're saying. And is there just some sort of disconnect? I don't get how you could have such a great quarter when they are saying things that really aren't that positive.
Yeah, well, first, Cummins is a diverse business, so we're in things besides heavy-duty trucking. We are projecting heavy-duty trucking to be down for the year 7 to 12%, predominantly in the second half. So we had that benefit of back orders and strong demand and the product performing really well in the market. And the applications like vocational, there's been strong demand in vocational where Cummins is a really strong player. So that really benefited us through the first half. We're projecting to be down 20% in the heavy-duty market in the second half. Some of those other Cummins markets, so like medium duty and the power gen market, are going to stay strong for us even into the second half of the year.
You've got the great mosaic. It's not like the old days. Really fantastic work. I want to thank you, Jennifer Rumsey, Chair and CEO of Cummins. It's so good to have you on the show. Really great. Thank you.
Thanks, Jim.
Mad Money's back after the break.
Coming up, where does Nextracker stand as the world races to decarbonize? Cramer's getting the latest on the impact from Washington, the data center build-out, housing market, and more with the CEO. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.